Hey guys, I wanted to provide some quick insight into the real estate markets today. So I'm sitting here thinking, like probably many people across the country, what's going on? How does any of this make sense, right? We're sitting at a time where, on the one hand, we've got millions of Americans who are struggling. They're in forbearance. And if and when those forbearance plans end, they could face some major financial struggles to pay rent or pay mortgage. And literally simultaneously, you have millions of Americans on the other side who are still paying their mortgage, own their home, and they're seeing property values go through the roof. And it seems like there's two economic realities going on. And I was sitting here just looking at my own neighborhood as well, wondering, how is this possible? How do these property values today make sense? How could it have gone up this much from 2 years ago? So here's the crazy thing when you really look at it. If you think your property values have gone up and you think this isn't driven by monetary policy, then we're not paying attention. I want to show you some interesting charts. The first chart, right? This sounds like a tagline from your local realtor and loan officer. What's the line? Oh, mortgage rates are at historic lows. Yes, that's true. Look at this chart from Freddie Mac that shows weekly mortgage rates since 1971. This is the lowest they have ever been in, what is that? Almost 50 years, 49 years, right? It's the lowest they've been in my lifetime, parents' lifetime, grandparents' lifetime. Well, what does that mean, right? Then if we just look at even the mortgage rates in the last 5 years, and you can see on the second chart how much those rates have dipped and how much they have really been pushed down since COVID hit. And you can just see it pushing down. Now, what does this mean? Why is that so important? So here, I decided to run some math. Check this out. If you look at, you could pick any mortgage amount. I picked a $400,000 mortgage. And if you look at where the rates were in 2018 for that $400,000 mortgage, right? It would have cost $2,147 per month in your monthly payment. And if you look at every, 3 to 6 months where that mortgage rate kept ticking, and especially over the past 6 months where it really pushed down, look at how much lower that mortgage payment is. Well, that sounds like that's great. That's great. So here's the flip side of that. That means the same couple with the same amount of disposable income that's looking for the same mortgage payment is all of a sudden going to go from a $500,000 purchase, right? Assuming the 20% down. And it's going to push that property value from since 2018 to now from 500,000 to 680. And I bet you there are people across the country that will attest to the same thing. Many markets are claiming, oh, it's because we're getting all of these urbanites that are leaving the urban core and coming to the suburban areas. Yes, that may be true, but I don't think that's what's driving this. I think this is totally monetary policy that has pushed those rates down. So then the question obviously is, what's going to happen when this comes back up? Can this come back up? Is the government and central bank going to be forced to keep this low for 5-10 years until the what the economists we would call it the nominal price, right, versus the real price, or we do have to wait till the real price climbs up? I don't know. one thing that I'll say is, what should an individual do about it? Well, if one is in a position to refinance, you should definitely do it. I would not recommend going and doing a cash out to try to extract the highest LTV you can, because at least for me, I'm a little concerned that what's going to happen is this starting to become a bubble because those rates are lower than they've ever been. And if they climb, it could push those values back down. So I wouldn't necessarily say go increase your mortgage amount, but if you can keep your mortgage amount, loan amount where it is, and refinance and save, 15-30% on your monthly payment, do that. Lock it in and keep your monthly cost low, because I, for one, am concerned that property values right now are on a tear that is monetarily and fiscal policy driven. And I don't know what that means as far as when does this dance end and what happens. What does this look like in 3 months, 6 months if other dominoes fall? I don't know the answer. Maybe you know the answer. Please leave some comments and start the conversation. Thanks so much.